Hi, I'm ADC of Purchase Rationale and also the author of Trend is Trend. Good day. The date today is 15th of February 2023. It's Wednesday and the time now is 12:37 p.m. Malaysian time. Purchase Rationale rationalizes 15 reasons when considering a particular stock. I have to put in a disclaimer uh, to qualify the validity of my posting here and also to qualify for the legality since my license for CMSRL has already expired. So, whatever I share here is purely for information and education only. uh, should you decide to take action to buy a particular stock in discussion, please first consult a financial planner or a licensed broker. Okay, the stock that concerns us today is one that has been revisited for the fifth time today. Interestingly, five times. So there must be something going on. So we are talking about uh, Malaysian Smelting Corporation (MSC), and the stock code is 5916. Okay. Anyway, since this is the fifth time, I will go through the whole process again to redo the analysis, and also because on the chart wise, uh, something new has appeared. Okay, so let's go through the process. Okay, uh, for the first thing on the fundamental side, we look at the operating earning yields percentage, which MSC indicates 8.65%. What it means is that for the current market price against the intrinsic value, whatever excess or whatever premium that exists, MSC with the current operating earning should be able to cover the differential. Should there be any differential existing between the current market price and its intrinsic value. Okay. More importantly, the if you add the operating yield percentage with the ROIC, it's over 32, 33%. Uh, if according to the magic formula, it more than meets our condition and requirement, because anything above 15% already qualifies for the magic formula. Anyway, 15% is my arbitrary figure, which I accept unconditionally as a good stock. It has a low enterprise value to EBITDA, which indicates the acquirer's multiple. Anything below 10 is good. MSC is 7.9. Okay, so as a counterbalance to Magic's formula, which is EBIT over enterprise, and since TradingView does not have EBIT over enterprise, I use the inverse. That is enterprise over EBIT. For as long as it does not exceed 10, in this case it is 8.48 or 8.5, I will consider this as a stock of good value. Okay, low PE ratio of 6.5, PEG ratio of 0.073, meaning there is still plenty of room for growth and expansion. All right, still pays a dividend of 2.15, positive free cash flow, trailing 12-month basis of 133 million, a good, healthy Boytrowski F score, meaning if if you take on the average uh, to measure what I call profitability, leverage, and also proficiency of management. 7 is seriously a good figure, meaning currently MSC is doing well, right? The Altman score of 3.05, 2.5 is our normal acceptance. So it exceeds the expectation. Good market cap of about 900 million, 819 million. Uh, in in what I call the magic formula, any company above 5 million is a good size company for consideration. Current ratio of 1.54. Normally, we will accept anything above 1.2. Basically, this one is necessary at 1.2 because MSC has as a net debt of 338 million, meaning MSC is not a net cash company. That is why you must have a good current ratio to be able to meet its commitment to pay and service the interest most likely from the bank of this net, and knowing very well too in a company refining metal, iron and steel. Basically, they are very capital expenditure heavy, needs lots of borrowing for machinery and also for raw material and electricity. So they need that. So anyway, uh, the net debt to EBITDA is 1.59. Okay, quite high due to the borrowing, but it has a good record of retained earning. That means previous earnings accumulated over time of 285 million. So the only reason why I look at MSC now is the current delivery in the chart, which I will discuss afterwards. But generally, I will just say that MSC looks promising at the interim, all right, present situation, all right, and I would classify this as generally investment grade company, all right. Let's take a look at the chart now to check the sentiment of the market today. All right. Now, what I want to mention initially is that MSC recently does what we call a MA rebound, right? It rebounded on the MA 21 line, right? So the candlestick or the price action has breached and break out through the MA 21 line. This is the red line, the MA 21. And so the entry strategy is a MA rebound. Okay. Trend wise, no problem. The lowest point is over here. You have a multiple of higher lows here. First breaching the MA 55, now breaching the MA 21. All right, it's above the cloud, no problem. And momentum wise, price action is above the cloud, and also the ROC is above the zero line. So trend momentum has been established. All right, and the slight concern is that we took a little bit more risk because the price action has not break up the MA233 line, which is actually the indicator to subsume that it will be have a bullish ascension. But in this case, since the fundamental is good, we take slightly a little bit more risk and hopefully to get better returns. All right. So if it continues to break up and breach above or break above the MA233 line, then you can be quite sure that this is definitely a good buy. Right? Okay. Let's look at since I mentioned that this will be a MA rebound. And should you buy at the current closing price of, let's say, hold on, okay, current closing price of 2 ringgit and 12 cent, at 12:30 just now, with a target price of at the top of wave 3. Actually, the MA rebound reflects the beginning of wave 3, ascending onto the beginning of wave 3. And should it achieve the target price at the top of Helio wave 3 at 3 ringgit and 63 cent, 363, with a stop loss of 1 ringgit and 73 cent, you will have acquired risk to reward ratio of 3.9 times, which is excellent. All right. Anything above 2 to 1, uh, is considered a good risk management measure. So anyway, this is 3.9. Right. Now I added this purple line for a reason. Why? Because this line actually touches the apex of wave one. So in Ilio wave, you know that uh, the the retracement from wave three, apex of wave three, down to the wave four should not exceed below the below the apex of wave one. So after you achieve the target, this is the level that is allowed uh, for retracement. For as long as it falls within this range, it is still impulse wave continuing. And if it falls below 4, then it is time for cut loss. Right. So basically, on the bias intact, there is some indication of volume being built up, but it has not reached what I call the bias intact status yet, because the volume breakout is not above the relative value of 1, or the average 90 days average, but the price action seems to look promising. Okay, so sentiment wise, if you look at the market today, let's check. Okay, MSC has gone up 10 cents since this morning, or about 5% increase. All right, at 2.2 ringgit and 12 cent. So looks like this is the best stock that trigger for the day. So if you think this trading idea suggested today is informational and educational, please like, share, and subscribe. If you like, it helps the channel grow, and it also helps with the algorithm of YouTube, to improve uh, uh, the rating of my channel, right? And if you share, uh, they will allow others, your friends, your family members, and more importantly, investors, retail investors like yourself, to be who are interested, to be able to watch the video too. All right. And if you subscribe, uh, then you will automatically receive any new postings that I make in future to you automatically. All right. So kindly subscribe, share, and like. Thank you for listening, and also your precious time. Have a good day, and bye bye.